Hey there, traders and investors. Todd Gordon here. Welcome to the Wednesday webinar. It is Wednesday, October 14th. And I hope you guys are doing well. We have a show that we promised you last week that the team's been working hard. We're kind of pushing the envelope, pushing the boundary a little bit, bring you a little bit better information, a little bit more organized, some new features here. So I look forward to it. So yeah. Feedback is important from you guys. Again, as we said last week, let us know what you'd like to see, what helps you through your trading and investing day. The feedback back and forth, we're watching it. And we'll begin to incorporate you more into the show. So again, look for more features. We're pushing the boundary and pushing the envelope as to what we're able to do here with live stream, which is super exciting. So thanks again for joining us. Obviously, a lot going on in the markets here. Yesterday's Apple event I thought was pretty interesting here. We'll talk about that. We're now in the middle of earnings season here. Financials are sort of all over the place. So we'll talk about that. But let's just get a sort of a check in the market here. Just looking at the futures off the bat here. We have the moderately higher futures, Nasdaq up by a quarter of a percent here. Looks like crude's getting a little bit of a bounce. Gold, I think, is useless. Bonds doing not so much here. But, you know, I think the big thing that a lot of people have been talking about and that we've been talking about on air on CNBC is this idea of sector rotation. And are we truly seeing a rotation, you know, back into the beaten down sectors like financials, like energy, like industrials? We saw a little bit of a glimpse of it last week, but then 2 days ago, we saw a huge push into technology. So I think that the answer is going to be, for now, no. We'll talk about that here during the show. You know, we've got all hands on deck in terms of sector rotation with Terry Long. He's been hard at work on that. Bennett will take you through the indexes at the after this segment from the Elliott wave point of view. And I think, you know, the thing that really caught my attention yesterday was Apple. I think this Apple this Apple event was, I think, not as well received as it should have been. It was kind of fun being sort of a virtual streaming event. I thought they did a really nice job on that, sort of getting the excitement up for this 5G launch that, you know, they've really been looking for here for some time. A few things that struck me. I'd like to talk about sort of the history of what happened through the iPhone and what it means for the 5G phone now. So, you know, they first announced the iPhone back in 2007 here. So 2007, the stock was extremely beaten down here. So let me just do this here. Scroll back. Get up to a weekly here. So all the way back here, and I can't even pull that much data in here unless I go out to the monthly. All the way back here, pre-split, they put out the Apple, the first phone. There's a lot of argument right now that the Apple is overvalued, and you know, this whole market is overvalued. And there's a few things to that. You know, one, we don't have an interest rate situation. We haven't had an interest rate situation like this, which is affecting the earnings. Earnings calculations significantly. Interest rates are continuously low. It improves the future value of earning streams from the equities, number one. You know, number two, we have a new economy here. You know, COVID cases continue to spread. The stay-at-home economy continues to go. As I said last week, we tried to see some rotation into the beaten down, but tech came roaring back. And we're seeing these names continue to go. So in terms of valuation for Apple, you know, when the first iPhone came out, Apple PE went up to as high as 43. Right now, we have Apple at about a 35 PE. So there's precedent, and we've seen this before. But again, when you put the current interest rate environment that we're so low into the equation, we could go significantly higher. I'm very long tech. I'll show you my positions here in a second, but let me just kind of round up this point I wanted to make on the Apple phone. Once they launched that first Apple phone, they took their top line revenue in 2006 from 19 billion and they grew it up to 66.5 billion. I'm checking my notes here. I don't have all these factors memorized. From 19 billion to 66.5 billion into 2010. So from 06 to 10, they like quintupled their revenues. Okay. And that was in the middle of a global financial crisis, right? 2006 to 2010. So the current estimates this year, okay, I'm not saying we're going to have a financial crisis. You know, it could do even more if we continue on the path we're in. So right now, Apple's looking to make about $3.24 a share. Analysts are expecting about a 20% growth next year, up to $3.87 per share. So, you know, I think there's a lot of growth to come. Now, there's this talk about us going into this super cycle here, which what that means basically, if you've heard this, is there's about 1 billion Apple iPhones outstanding. 350 of them are set to possibly go into upgrade cycle. That's massive, right? So, you know, I mean, are you guys, let me know, like in the comments, are you guys going to do your upgrade cycle? Are you going to jump in and do something new? I didn't shut the door. I hear my baby girl coming in here. So, you know, just again, the second Apple event that I found was interesting in the history of the iPhone was the 6. And the iPhone 6 was the most popular phone, most popular selling phone. In the first weekend, they sold 10 million units. Over the next 3 months, they sold 71 million units. And remember, 300 million are up for renewal here of the total iPhone outstanding universe. So they start taking orders here, I think, next week and the next couple days. So it won't hit earnings on the 26th, but I'm certainly looking to position Apple into the next following earnings reports. And the last thing I'll say is the services. They opened this segment with this new this iPod, not iPad. What's the at-home device that's supposed to take on Amazon Alexa, as well as the Google voice box, and then Sonos as well. I think services is a big part of Apple. It's about 25% of their overall revenue. They're going to continue to grow that. Services, they're making more money from the services, right? The subscription than they are from the Mac. I think from the Mac, the iPad, wearables, the home accessories. So Apple's growing. So all this talk about Apple being overvalued, for everything I just said, guys, I don't see it. I'll just finish up here. I'll show you my portfolio. As I said, I've not been able to do this as I was under a corporate umbrella for a lot of 2020. I'm out now. We've got some fun, exciting news coming up here, but you know, I just show you guys my exact portfolio sorted by positions, and you can see most of my largest positions right now are in XLK, Qs, Apple, Netflix, XLY, AMD, Peloton, and then I have a few option hedges down here, and then a lot of XLK up there. So I'm continuing to be tech heavy. I think that's where we're at, and that'll kick off the show. So guys, I'm going to bring in the team here. Let's see what's going on with Terry, Alex, and Bennett. Boys, good morning. How are you?
Morning, Todd. How's it going?
Did I already run over my allotted time? Guys, we even have a schedule to the minute. Did I already screw it up, Bennett?
It happens. It happens. It's our first time trying it, so, you know, no worries, no worries.
Okay, perfect. So let's see. What do you think, guys? Any thoughts, Terry, Bennett, on the Apple announcement yesterday?
No, I'm not an Apple user. I use Android, so I really don't care. Doesn't make me one hill of beans.
You know, I'm an Android guy as well. I love Apple. I love their product. I love the fact that their operating system is based on BSD, so there's some stability there in that. It's great for producers. In terms of the iPhones, I really haven't been a huge iPhone user. Earlier in my smartphone days, I did spend some time with iPhones, but I think it's a great product. So I'm kind of curious to see how the market absorbs that that press conference and the release of the 12 and see how that carries into the next few sessions.
Nice, nice, nice. All right, so let's send it to the indexes, Bennett. Let's take a look at where we are from the Elliott wave point of view. I'll send it over to Bennett. I really want to get context as to where we are. Does this rally continue? Bennett, take it away, sir.
Sounds good, guys. Let's jump into it here. So, traders, again, my name is Bennett Tyndall with TradingAnalysis.com. Thank you all for tuning in this morning, and hope you're enjoying the show. So last week, we looked at a wave count in the S&P, which was suggesting, in fact, the most recent low, which in the S&P was the 24th, in the Nasdaq 100, it was actually the 21st, was simply a directional fourth wave correction. So let's dive into the chart here, and we're going to use the Motive Wave platform to work our wave counts. And looking at our preferred interpretation of the S&P 500. We're even going to get to the Nasdaq here in just a second. But if I take you guys back to the credit crisis lows in March of this year, we began a motive impulsive 5-wave rally. And within this particular rally, we certainly have seen a little bit of a challenging subdivision. I talked previously several weeks ago just kind of about the psychology associated with coming out of such a significant directional correction here in the market. And I noted the fact that, you know, the fact that we don't have clearly isolated corrections within some of these subdivisions is really not all that surprising, given the fact that there was some uncertainty in terms of investor sentiment coming out of that March low. So I know there are a lot of Elliottians who are assigning that September 2nd high as the third wave top, which originates off the March low. And while that's our interpretation in the Nasdaq, in the S&P, it's a little more difficult. So the workaround here is to just simply look at this as a wave 4 pullback, which is still part of that higher degree fifth wave. And taking you guys off the daily, I'm going to drop you all the way down to a 1-hour chart. Last week, we were entertaining the idea that, in fact, this was a completed directional fourth wave correction. And what I love about this is it completed right into 161% of the time elapsed in wave 2 of the same degree, which is a very common fourth wave target when you kind of surpass equality of time elapsed in wave 2. So from here, all we did was print a nice directional measured move, demonstrated equality, so that secondary corrective leg was equal in terms of magnitude to that initial decline off of the September 2nd highs. And now we continue to move higher in what I'm viewing as a motive impulse inside of this wave 5. So off of the September 24th lows, we've got a beautiful 5-wave move up here in one, a 3-wave correction. You know, what's really interesting is both of these two corrections were actually driven by catalysts. So we had President Donald Trump and First Lady Melania testing positive for the coronavirus. That kind of gave us some initial whipsaw and a little bit of a correction there. The second large wave 2 that you see right here was in regards to the Trump tweet in regards to stimulus talks going into the elections here. So you'll notice both of those corrections were bought up. With our members, we were looking at a wave 3 top here into 35.50. We got about 35.49. We're pulling back into what I'm viewing as a fourth wave inside of this higher degree wave 3. I think this pullback to channel support is going to give the S&P a move straight through the September 2nd highs, and we're going to see new highs in the S&P going into the election. Once this overall 5-wave structure comes to completion, and we've got a pretty thick zone between 3,600 and 3,800, that's when I do see the possibility of a larger correction taking place. But where that fits in regards to the larger picture simply sets us up for additional upside. So if one were to entertain the idea that the 5-wave rally that we're currently viewing off of the March low was in fact the wave 5 of the cycle degree, it would make for a very unusual 5th wave. So even if we do see that correction, we're going to be viewing that simply as a wave 2, which is just going to set us up for a 3rd wave in that higher degree 5th. So I remain longer term bullish. I think short term we do have implications into new highs here in the S&P. And at which point I do think we'll have a little bit of a breather, but that should just set us up for a move to even greater highs and up towards that higher end projection zone. Over to the Nasdaq really quickly here. Nasdaq has a very similar wave count. Unlike the S&P, we can assign that 3rd wave top to the September 2nd high. Again, a directional wave 4 correction, and we are resolving higher. Semiconductors look very constructive. Consumer discretionary, this was another chart that I put in front of you guys last week to suggest, hey, maybe this is just a wave 4. You'll notice here in consumer discretionary, the wave count exactly resembles that of the S&P, coming out of a wave 4 zone, which took us to about a 38% overall retracement. And in fact, in consumer discretionary, we've already surpassed that wave 2 high. Tech also looks very constructive for additional upside here. I'm tracking wave counts, which suggest we're going to be breaking through the September 3rd or September 2nd highs there in the coming sessions. All right, let's take, there was one other chart I wanted to put in front of you guys. Google was another chart that we were looking at last week, a nice 5-wave move to the upside, 3 waves lower here in the wave 2 position. We've already pushed into the 1.618 3v1 multiple, so market continues to remain healthy. And to Todd's point, we did see some interesting tapes last week that were kind of suggesting that perhaps we were going to see at least perhaps a short-term rotation into value and away from growth in tech. But I still think that tech should remain kind of the dominant exposure in one's portfolio. It continues to perform well, and I don't think it's going to be slowing down anytime soon. So Todd, back to you, sir.
Great work, Bennett. Oh, that Google setup. Oh, that ABC setup down into whatever level that was. We looked at it. We talked about it as a team. Kind of let that one go. We were probably focused on getting the show going rather than trading it. But yeah, good work. Continue to be bullish, guys. We're gonna have our first official commercial break. This is like a real show. We're gonna have a commercial break. All right. So guys, hang tight. We'll be right back with you after these important messages.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to TradingAnalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day, we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life 7-figure portfolio with our members who prefer the longer-term investment timeframes with some medium-term trading and option strategies mixed in as well. So head on over to TradingAnalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show.
I promise the commercials will get better. I promise. That was done last night at 1 a.m. Hey, we're a bootstrapped, homegrown YouTube live stream, but why not? We're having fun. So anyways, let's get back to the content. We've got, I like to call him the professor. He gets mad at when I say that, but Terry Long is our sector rotation king. He's going to show us kind of what sectors are moving. And again, that's the real key to trading and investing in this market, is identifying the sectors that are outpacing the broader indexes where you want to be long and focusing your investment dollars and your options, and the ones that are lagging where you want to be out of, underweight, or if you're a trader, shorting or even buying puts and put options. So really important. Let's bring in Terry. Terry Long, what's going on in the sector world, my man?
Good morning, guys. Hope everybody's doing well here. Yeah, we're going to take a look here real quick here at the indexes. The first thing I like to look at is performance of the S&P on a weekly basis. I've got these little boxes here. So last week, we saw the market begin with the seesaw move on Monday, right? A day up and a day back down. and then we had an acceleration through the rest of the week. Well, look, what do we have going on this week? We had a move up on Monday and a retracement here on Tuesday. We'll see where the rest of this week takes us. Now, one of the things, market price action pushed the S&P above the 618, and now we're actually settling all the way now, sitting here right on the 786. Nasdaq similarly, right? Both of these markets are holding well now above their 50-day moving average. Now over here on the sector performance, all 11 sectors last week reported higher. The S&P was up about 3.8% for the week. Materials, utilities, energy, technology, healthcare, industrials, they all outperformed the S&P. But let me show you what's going on today. So this is the 2 days. This represents Monday and Tuesday's price. We've got communications, technology, and discretionary taking the lead again here today. You can see the gap higher here on the Nasdaq, a little bit higher percentage than what we saw on the S&P, and that's mostly due to this technology transition here. So I'm going to take you over, and we're going to take a look at our weekly chart. Consumer discretionary continues to retain a slight edge over the technology. But both of these, if you'll notice here is discretionary, here is technology. That was last week, and then the rotating just 2 more days to turn this week. It's very stable. There's almost no movement here, right? So these guys are not going anywhere anytime soon. Now, materials, the materials sector continues to lose momentum. It's heading towards the weakening quadrant. In spite of last week's price gain. So materials had good price gains last week, but yet I'm still seeing momentum decay. Communications is one of the weakest of our leading sectors. I'll talk about industrials here in a second, but communications is still slightly pushing to the left, and there's some pressure in that industry, I guess, with antitrust concerns. But Monday's gains were pretty big. There were 2.5% gains on Monday. So that may help slow this decay into this weakening quadrant. Now, the industrial sector is our new entry into the leading quadrant here. It does continue to gain relative strength all the way up until Monday and Tuesday. So we can see this arrow pointing down. This arrow will only be completed once we get through Friday's price action. So it's only 2 days out of thought. But this is an early warning sign to me. I'm seeing a negativity now in industrials, at least for what we've got at the first half of this week here. We'll see how that turns out the rest of the week. So I was hoping that industrials was going to continue to push to the right and overtake the materials sector, but I'm not sure right now. But like I said, technology and discretionary remain resilient because they're very short tails here. Now, the defensive sectors, these are all underperforming. Everything here to the left of the line, these are underperforming defensive sectors. They are starting to show some increased momentum, all except for energy. But I'm just not seeing the evidence that any are ready to take a new leadership position at this time. I really need to see more of this horizontal push. There's a little indication in financials, but that's really in sad shape. And then now if I add Monday and Tuesday's action, you can see that even dissipated in financials. You can see the tail turn here in real estate. So not really too happy about that. So we're going to go into a sector focus. I'm going to go into just the one sector at a time here, and just going to do technology for you today. So in technology, we've still got AMD. Well, look at here. NVIDIA's finally overtaken AMD, and I forecasted this last week, and I'm seeing it now. So AMD has continued to push further south here. NVIDIA has returned back to the #1 leader in terms of relative strength ratio. But I'm seeing here in Apple and AMD both actually have lost their leadership position or the leadership quadrant. They're moving down here now into this weakening quadrant. So let's see what else we got here. Many of the tech stocks that are in this lagging quadrant are actually seen gaining momentum and possibly poised to push up here into the improving quadrant, and that's what we've seen here. So from last week till now, they're toying with the idea of moving out here. I'm even seeing Intel, which is is really one of the underperformers in the semiconductor group, and it's taken a long rotation road, but it's starting to gain some momentum now, and that's not gaining enough relative strength for me to jump in and buy it. I certainly wouldn't trade my Nvidia stock for Intel right now. I'm gonna hang on to this. PayPal and Cisco. Cisco continue to decay. Microsoft, though, I will note, watch Microsoft. So Microsoft, I've been telling you to watch this hook that's forming here in Microsoft. And as we rotate into this week, now my trend bar is actually turned from a yellow, which is a warning that we are weakening, back into a green, which tells me we're moving back into leadership position here in Microsoft. Let's take a look here real quick. Semiconductors is part of the is a subgroup of the XLK. So several of the semiconductor stocks that had been pushing lower into the weakening quadrant have now formed hooks here. So let me animate that a little bit here. So I saw a lot of weakness going on here late September, and now as we move back into October, we see this rotation. We see the hooks forming here. That tells me that these guys are priming themselves to return back into a leadership position, and lo and behold, I'm seeing them climb right back up. A lot of momentum coming right back into semiconductors. I think this is one of the subgroups that's going to help bring the technology sector back in play. So that's it for this week, guys. We're going to go short. I'm not going to run through all of these. It's just too much for the time allotted, but I promise I'm going to focus on each one of these sectors. It may be a leading sector, it may be a sector full of laggards, and we'll take a deeper dive inside of some of the stocks that are contained in each one of these sectors going forward. All right, back to you, Todd.
Great work, Terry. I really appreciate that. Yeah, we're starting to see some very nice sector rotation back towards tech, and again, I'd push back at DB a little bit. Stratospherically valued, negative. Again, we've got precedent for Apple being a 45 PE when we're currently 35, as we're about to go on the next super cycle. They grew revenues by 50% over the next 5 years. So yeah, they're highly valued, but again, you've got to factor in the extremely low interest rate environment. No alternative to get yield anywhere else, except in the equity markets and some private equity investments and stuff like that. So, no, really good work, Terry. Appreciate that. I've got an interesting setup on Microsoft. He noted a hook in MSFT coming up on earnings. I've got a trade I'm going to set up for you, but first I'm going to send it over to Alex. Alex is going to get us caught up on the macro, as well as Bitcoin's been moving here a little while, and I know he had a new position. So Alex, what's going on, my man?
Hey, good morning, Todd. Good morning, traders and members. Yeah, market was a bit of a calm lately in terms of a dollar and yields move. So we will go a little bit about that, oil and Bitcoin. So let's dive in. Okay, so this is the 10-year yield. So we track this one very regularly with our members, and we had seen a small pop-up in yields in the last weeks, but still this is not enough to conclude that these yields are going to jump up out of this consolidation and continue higher. For now, we are looking either this as an A, down in B, potentially up in C, but the environment is not so favorable to yields higher. So we are still kind of having a reserve wave count this as a kind of a triangle with another push down. So on yields, moving sideways, nothing still new on the front, but we are really looking for a breakout soon of this very strong support levels here at around 0.6. So let's dive in and see the oil market. So in the oil, we have been looking for a move down after a 5-wave move up that completed around 43.77, 44. And from there, we have seen a move down in 5 waves. And currently, we are consolidating in a sideways, probably a triangle consolidation, which we label down in A, up in B, and down in C. So we are looking for one more move down in oil after this consolidation is completed. Also, there is an alternate wave count with the WXY, another push down, and then we will see how the oil will actually behave around 33, 34 levels. As you know, some of the European countries and few countries in the world as well are expecting a second wave and partial closure of the economies. So to expect in this kind of environment oil lower, I think it's pairing well with this wave count. So let's look dollar index. Not much of the price action. As you know, we have been short dollars for the last few months. Actually, from the April, we were looking for a move down, and actually this move happened in a 1, 2, down in 3, 4, and 5. We are still looking for a bounce of these crucial levels, and we label this for now as an A, down in B, up in C. For W, we are expecting completion of this X wave, and I think this is a key support levels here from 92 to 93. I wouldn't like to see a price go much below of these support levels, because then we will have to simply prolong this wave 5 a little bit lower. Environment is still kind of in no man's land if you look euro dollar and dollar index. So for now we're gonna stay neutral, but I will expect with a little bit of potential volatility around elections, a probable move up in dollar up to this 96, 97 highs if we see something constructive on the upside. So watch, guys, the 92, 93 zone. It will be a very key level for the dollar index going forward. So let's look a little bit of mirror image. Euro, same thing, not much of a price action. There is a key resistance levels here around 118. We have back down, so we have labeled this as an A, triangle B, up in C for this X. So I will allow a little bit of X to move a little bit higher, but not above this previous B wave, because we know that X wave doesn't go much above the previous B waves from the corrections. So I expect a continuation to the downside. 5 waves down in A, up in B, down in C for Y wave. So look for 114, 115 levels to provide a good support and a continuation of the euro on the upside as we go out of the elections and we get probably a vaccine at the end of the November, and some optimism kicks out, push the dollar lower, a little bit of euro higher, and then we will take it from there for the future outlook. So we also tracked for our members pound dollar. We have seen a nice pullback, and we are watching now these key levels around 130.41 on the higher time frame. We have labeled this as a finished correction in an A, triangle B, up in C. So I'm going to look a little bit more what this B wave is doing. It is possible if we start to move a little bit higher, so we can get to 130.150, 132 possibly, but then I expect pound to continue lower to this probable 124, 125 target somehow soon in the next few weeks. So we're going to track that. We are already have some positions on that, and we're going to update you on this one next time as well. So let's look cryptos. Cryptos, so 5 waves up, WXY, or a directional 5 waves down in A, up in B, down in C. So we are short Bitcoin with our clients, and I expect possible one more push on the upside, close to 112, or from here I will be look for a directional 5-wave move down, or the wave A if we get something more complex. But definitely my support levels will be between 8 and the 9,000 in times to come from the Bitcoin. Timing is around December 2020, January 2021, and this looks highly corrective. We have a 5 waves up in A, triangle in B, and 5 waves up in C. On the smaller time frame, also, we have allowed one more push on the upside, but not much, really, up to 1,800. And the same wave count we have also on the Ethereum, where we think we're going to get a little bit more, a bigger push or lower, and we're going to, I think, continue lower down to this 240, 260 region. So that's from me, guys. A little bit of macro, Forex and crypto. So back to you, Todd.
Well done, Alex. Really, really well done. Don't you guys love, if for nothing else, throw a thumb up on this YouTube video for like one of the only guys out there that I know of who actually would step in front of the Bitcoin community, which can be very dangerous, in short Bitcoin. He's constantly doing it. So good job, Alex. Listen, I hate to do it. We got to pay the sponsors. We got to do another commercial break. On the other side of the show, we will have the trade of the week. I got an important one coming up on earnings, then closing thoughts. So let's dive in, and we'll be back here shortly.
Hi, if you don't know me, I'm Todd Gordon. I worked in the trading markets as a profession and a passion immediately following college 19 years ago. As I've grown older, my trading and investment style has changed. As I've grown as a trader, my holding period for my investments was also growing longer. I was learning firsthand that being properly allocated in the right stocks and sectors on a longer term time frame with proper hedges in place and the idea of compounded returns are the keys to building real long-term wealth for most of the investing community. You can short-term and swing trade the stock and options market if you like, but do so with a very small percent of your capital. And by no means should you be trading with a majority of your investable assets or your portfolio. For our clients at Trading Analysis, we recommend that you don't trade with any more than 20% of your portfolio in the strategies for our members at TradingAnalysis.com. The rest should be managed by a professional financial planner. So last year I ventured out to make a final evolution of my career in the markets. I left the very capable team at Trading Analysis that I built to run the day-to-day operations. I set out to build a wealth management business leveraging our reputation from CNBC and our years in the financial markets. We'll be launching soon, so please keep an eye out for details. If you'd like to be updated as information becomes available, please visit www.tradinganalysis.com/investments. Again, thanks very much for your interest. Look forward to what the future holds. Cheers, and let's get back to the live stream.
And if you have a business or you know a business that would want to buy commercial advertising time, let us know. No, just kidding. All right, so guys, welcome back. A couple minutes to the open here. Checking the futures. Looks like we are just still kind of hanging in there. So the trade of the week that I'm looking at here, Terry mentioned it in sector rotation, is Microsoft. Okay, we're coming up on earnings on the 21st. And the way I see this is this sort of three-wave pullback was very interesting. Not as perfect in Microsoft as it was in Google, as Bennett mentioned earlier in the show, but the shape was there for a corrective pullback. A lot of people were expecting the downside selling that we saw in the beginning of September to continue. That's kind of how wave twos unfold. Nice ABC sell-off. We've then moved up sharply here as tech has come roaring back. And I think we're starting to move into a wave three consolidation here in Microsoft. Now, typically your wave three does at least the net percent gain of wave one, which would be right here at 223. So net percent gain of one, projected up in three is here. We're starting to consolidate at that level right here. Markets open. We're starting to move up here. We could have room up into this zone The 1.618 is possible in a wave 3, but we are coming up on earnings here in the next week. So the trade I'm looking to do for an option position, and again, I hold the stock right here in my various portfolios, but for an option point of view, I'm wondering if we can't do a little broken wing butterfly. So what we're looking to do is in the 23 October options, which again, our earnings are on the 21st, buying the 220 strike call, selling 2 of the 230s, and buying 1 of the 235. Altogether, it's going to be about a $3.40 debit. Okay, 346 now. I'm going to go ahead and put this trade on. I will do it in this account, and I will move over and do it in my other accounts. I'll just execute this live here. Confirm and send. Max loss is 1,600. Max profit is 3,300. I will manage that if we get down to roughly a 50% loss on that. And again, why would we do the 3 center around the 227 up to the 232? Because 227 to 232 is the sweet spot for that wave 3 projection, which even if we get a spike up and a sell-off in earnings, that butterfly will take advantage. It's Vega negative, and I just got filled on that trade. It's Vega negative, which implied volatility will come off after the earnings report. So that's the trade. Okay, guys, so we're going to leave that there. We're going to leave it there. That's nice English, Todd. Let's bring the team back in. Closing thoughts. I thought it was a good show. Let us know what you guys think. I think question of the week, and here's what I'd like you to do for question of the week. Anybody who is so bold, tweet me, okay, at Todd Gordon TA. In a video, take your cell phone, put it up here, explain to me how you trade, okay? Either write it in the comments below, or if somebody has the courage to take a video with their cell phone, give me a 60-second or less, how you trade, how you approach the markets, how you sit down every day and position your trading capital. Let us know. We'll feature you on the show, and you will get a special prize. So what do you think, guys? First show of like a focused, real TV show production. I think you guys hit it out of the park.
Yeah, not bad. I think it went well. It was a good time. Good time.
Everybody, Bennett, producing the show behind the scenes, pulling all the levers. Everyone, round of applause for Bennett. Great job. A lot of work went into it.
Nice job, man.
And we're only 3 minutes over. I can't believe it.
That's not bad. Not bad at all.
Hell of a job, guys. Good job. And throw a thumbs up. Again, tweet us. Also, right below in the comments how you approach the markets, what your primary form of analysis is. And if anybody has a cell phone video or a real video you want to tweet to us, we'll include you in the show, and we'll send you out a special gift. So thanks again, guys. Any closing thoughts, or is that a wrap?
No, I think that's a wrap. Just a heads up to any of you guys who are watching. Next week, come prepared with your questions. We're going to have a dedicated Q&A section at the end of the show next week where we can bring your question up and address it, go through it, talk about any charts you want to look at as well.
Guys, we're going to take a wrap, and then members webinar starts in 27 minutes, 10 a.m. every Wednesday after the YouTube live stream. We get all the members together, and we go deep dive. So check it out, TradingAnalysis.com. Obviously, we can take care of any markets you're trading. Clear, transparent analysis. Obviously, we got a great team. So thanks for watching, guys, and we'll catch you all next week. Take care.
All right. Click on that thumbs up, guys.
See you
guys.
week.
Bye-bye.